Okay, so today what we're going to be doing is another trade update video. So previously, a couple weeks ago, I actually did a trade update where I showed you what trades I'm taking on a weekly basis and exactly why I'm opening the trades, closing the trades, and a little bit about the analysis behind some of the trades that I'm taking. Reason being because you will be able to use this for your own educational purposes. So as you can see, previously we uploaded this video talking about some big trade ideas that we were able to use in the markets. Those trade ideas performed incredibly well. A lot of my students took the ideas and they were able to make a good amount of money. And then there were some students on the YouTube channel who actually got back to me and said they took some of the ideas and it went very well for them. Now, one thing I did want to say is these videos are just for educational purposes. I'm not trying to give you investment advice to try and show you, oh, you should be investing in this or that or the next thing. But because I'm trading in Forex, commodities, indices, and stocks, I'm able to share with you the things that I'm doing on a weekly basis that I'm using to make money, which can also teach you a lot more about what you can do on a weekly basis that can make you money. To anyone who's new to these videos, let me just introduce myself. My name is Morgan, and I'm the director of MS Equities Trading. What we do is we not only trade and invest in the financial markets for our clients, we also educate students in about 28 countries around the world. So we not only are an investment group, we also teach people about how to do it for themselves. Right now, we're actually running a promotional discount because we had some very big announcements that came out in a previous video. You can watch that video if you want. And basically, because of what we're giving away, we're going to be doing an 80% discount on 60 spots to students who want to join from anywhere in the world. They'll be able to come online and learn with us through an online training academy and a specialized private coaching program. So to anyone who wants to learn more, make sure to get in contact with us, study at msequitiestrading.com, and my team will get back to you. But let's jump into these videos. So what we're going to be doing is having a look at these trade ideas. So basically what happened last week is I took about 12 different trades. I had 11 wins and 1 loss. And the loss that I had was just because of slippage. It was basically because the market spiked, hit my take profit, and actually dropped back below where the buy order was and actually went for a loss. But I lost no money on the trade. I think it was, only a few cents that I lost on the trade. It was absolutely nothing. But what I'm going to be doing is showing you the updates on the trades because like I did in the previous video, I showed you these trades before I had taken them, then I took them, and then I made myself a 0.3% gain, which is a really, really good gain for the week. And going into this week, I'm going to be doing the same thing as well. So as you can see on this picture over here, those are the trades that I've taken, and those trades are uploaded to my verified trading portfolio on my FX book. So these are real live trades that I'm taking for myself and for my investors. So it's pretty big for me to show all of these trade ideas out to you. To anyone who also wants to keep updated on this, you can follow me on Twitter because all of these trade ideas are posted out on Twitter before I trade them, as well as when the trades are opened and when the trades are closed. So you can keep updated on a weekly basis on everything I'm trading. But also on top of it, if you want to go have a look at my FX book, you can have a look at it. There is everything up there, my verified track record. There's going to be a link down below for you to go have a look. You can see all of the trades for yourself, and you can also see all of the trades are real. But we're going to be starting off with the Euro Aussie dollar position. So this was a position that I alerted out. Right now, the position is not performing exactly how I thought, but I decided that I was going to get into the position, see if I could take some profit and then get back out of the position. So we're going to jump on the charts and start analyzing these quickly. So as you can see on the charts here, basically I landed up spotting a trade idea over here. And also make sure to go on to the previous video like I said, because then you can have a look at the full analysis. But basically, like I said previously, we came to this previous resistance level where price had moved up here historically back in 2015 between 23rd August and October. And recently it also moved up to that level in February 2018. So there's a very strong resistance level here. And as we could see, price was moving back up to that level. So I capitalized on the position. I went in on a short at on the 17th and the 18th. I added 2 sell orders in at an open price of 1.63 and 1.62. And I managed to come away with 37 pips on the one trade and 10 pips on the second. So that was a 0.03% gain. Now that position was a very, very small gain, but once again, it was still a good position. Main reason why I actually got out of the position is because I just wasn't feeling that the position was performing well, and I'm going to show you that now. So if I go down into the smaller time frames, what effectively happened was I went in on this position around about on these spiking levels here, and I saw how price was coming down right through to this level. And I didn't really enjoy the fact that I saw this price level forming up over here. I really didn't think it was looking good, so I decided to get out of the positions. So the first position I got out of was on the same day, on the 17th. I got into the position and then out of the position on the 17th just for a 10 pip profit. That was quite a quick trade. And then the second trade I got out on the same day as well. So I got in, took 37 pips, and then got right out of the trade. So that was mainly because I didn't feel the position was performing as well as I thought it would. I thought that there would be a much stronger bearish movement on the position, and there wasn't. And I was very lucky because of that, because the market turned and has now slowly moved back up to the previous levels. Now this happens from time to time. Sometimes you can't take the big position. You have to get out of the trade and see if you can reposition yourself. So basically the price has moved back towards where my previous sell orders were, which now gives me an opportunity to re-enter the market, which I have done. So what I've done is I've re-entered on the positions. I've seen if I can hold it for a longer period of time and see if later on, maybe this week or next week, the market decides to turn and move bearish again. I still think the long-term overview of the idea is still workable, and I should be able to make anything between 0.25% to 0.5% on this trade, but I need to wait my turn, and I need to wait for the market to gas out the rest of its energy before it pivots. So sometimes I have to get into the market, get out of the position, and then get out of the market and wait for the opportunity. So that's what you saw on the 17th. I took a trade, didn't like it, got back in on the 18th, didn't like it again, and now I've got back in this week and I'm going to see if I can capitalize on a bearish move. So on to the next position, we're going to be having a look at the Aussie dollar CAD, and there was two positions that I took. So you're going to see on this picture here, there's actually going to be Aussie dollar CAD that was executed on the 18th of the 9th. That was a 0.03% gain. And then more recently, there was a trade that I executed on Friday on the 21st and got out of it this morning. The reason why I put that position in these in the previous week's video, which is this video now, is because the trade was taken last week and I wanted to get out of it that same day. But unfortunately, the market closed. But I had to wait till Monday so I could get out of the position. But on that trade, I was able to make a 0.3% gain again. So it was a total gain of 0.06% on the position. I was happy with the position, but once again, I don't think it was performing exactly as I thought. So I decided to get out of the position and wait my turn. This was also one of the trades that I alerted out and also one of the trades that I did on the video. But as you can see in this trade idea, what effectively happened was getting into this position, as you can see, in this position, I managed to get in right over on this level over here. There was a huge spike up, very big bullish move, and I knew the market was going to be gassed after such a strong move. So I decided that basically on this level here, I wanted to get out of the position, take my profits because I knew the position was going to break down. Then I went back in on the 21st. So you can see on the 21st, what effectively happened was we had a slow movement up. There was a breakdown to these levels. There was a very strong down spike. And this down spike was basically on some news volatility, which I didn't think would hold in the market. I knew that there was probably going to be a strong recovery after the news got digested. I got in on that position, waited for a strong move up, and then managed to get out of the position again. So that was just a simple example of how I was able to capitalize on some news hitting the market, got into that position, got out quickly. That is just a quick trade that I was taking. These trades happen from time to time and I'm able to profit on them. Now the long-term overview, the reason why I didn't want to get in on this trade over the longer term is because I feel that the trade has not made the movement I think it should right now. In terms of me staying in on this position, I still have one order open from way on earlier, about 2 weeks ago, and I'm going to see if that position plays out. If it doesn't, I'm going to cut the position, but luckily the price is far beyond my entry level, so I have a lot of room to move. Now, if price comes back slightly, I might try and get into the position. If price regroups and I can see something else play out, then I will. But I need to wait my turn. I got into this position, I made my 0.06, and I'm just going to wait and see. And that's the thing, is I don't want to try and get back into this position and then the market falls further and then I've got a losing position I've got to deal with. So the next big one that I took was on the New Zealand dollar Swiss franc, and the New Zealand dollar Swiss franc was a nicer trade. First, on the 18th, I was able to do a 0.03% gain, and then on the 14th, which was way back when, about 2 weeks ago, I took a position very long ago and I got out of it on the 20th. You can see that was a 0.05% gain. So going on to the charts, you can see that on this position way back when on the 14th. So I'm going to be looking at the first position, which is higher up on the picture. You can see on the 14th, I was basically getting in on this position around these levels over here. And what I was basically looking at was a bit of a level over here that was showing a strong level of support. I saw how price action was moving down to these levels with these very strong down spikes. So you can see over here, I'm just going to zoom in a little bit. So you can see over here, there was 3 very strong down spikes that were being caused, but that position I only took later on. But I saw over here, there was a very strong down spike. I thought, let me get into the position. I got into the position, the market moved slightly higher, decided to not get out of my position. Market moved back down into a loss and then started moving sideways. Now, the reason why I got back into the position later on is because I saw that there was a strong level forming up over here where price was constantly testing this resistance. And as you can see right on this level, you can see how the price action has formed this wedge, moved up, broken through this resistance level and moved much, much higher. So what I basically saw was that the position was performing well. It came down to a level, I had one position open, and I saw that the market was regrouping. It wanted to test that resistance level, and it looked like there was a strong amount of bullish resistance. I waited my turn, waited for the position to break, and as price moved up, I got out of the first position and then out of the second position later on. So that was a 0.08% gain. And as you can see, these positions that I'm taking are 0.06% gain, 0.05, 0.10. Sometimes the positions go up to 0.25% or 0.5%. But the reason why I'm doing this is because if I do this every single week consistently, I can get in and out of the market throughout the week, and I can take low exposure on my portfolio, but I can produce a high rate of volume, because if I'm doing 10, 15 positions of this every single week, it adds up. And over the long term, over a month, I can make anywhere to half a percent to a full percent just trading these shorter term positions. And then I'm also holding longer term positions on the portfolio as well. So I hold a few short term positions, a few medium term positions, and a few long term positions. In the end, this adds up, and that is why over the last 12 months, I've been able to amass over 18% gain in my investment group on my main portfolio. And I've been able to do that with volatility of only around about 6.5%. So, my risk reward is close to 2.82. And that is a really, really good ratio because I'm not risking too much of my capital to produce that return. So right now, you think these positions are very small. I kid you not, it does add up. The next one is going to be on the gold position, and the gold position was quite interesting. I'm just jumping slightly higher. So the gold position was quite an interesting trade. Basically on Friday, there was some big news that came out from some of the central banks talking about gold. There was a few other big news releases that caused a big hit on gold. Also, the Federal Reserve said that they were going to plan more interest rate hikes this year, and the gold valuations dropped quite heavily. Now, there was a huge amount of volatility, but the thing is that when the Federal Reserve comes out saying these things, this usually happens, and then it follows by a strong recovery. So as you can see on the chart here, basically what happened was there was a huge spike down. So I was watching the trades as this was happening, and I can see the position was falling quite strongly. I decided to enter a trade right over here. So you can see the first trade was for a small loss, and that was on the 21st. So that was a 0% loss. It was very small. But then as the market spiked much lower back down to this level, I entered an additional position and I was able to make 0.05% on that. What I saw is that coming straight back up, the position moved very, very closely to my take profit levels. It moved within 2 or 3 pips of my take profit levels and then came straight back down. And unfortunately, it didn't trigger the take profits. So on this trade, I was just basically capitalizing on some extreme volatility in the market. It's happened many times before. I've made this trade probably 40 or 50 times in my career. So it happens a lot when the Federal Reserve comes out with big announcements and the market sort of gets a big hit. Sometimes gold takes a big hit. Sometimes the dollar takes a big hit. And what I was basically doing is getting in on a strong spike down and waiting for that recovery. Now, what did happen was that I did miss is that the position recovered much higher beyond where I got out of the position. So I could have made a lot more money, But at the end of the day, as a trader, you just got to move on. You got to get onto the next position and keep on going. On this gold position, I've got quite a few long-term positions in, so I'm not too worried about what I don't make on this, because over the long term, I'm hoping to make 3 or 4% on this single trade alone. Now, that is a long-term trade. It's a trade that I put up over here, so you can have a look at the trade idea and learn more about it. Then the last position that I'm going to be talking about is on the Japanese trade. Actually, there's 2 more positions. So the Japanese trade was a trade that did not work out. And I'm showing you that just to show you that I was happy that I got out of the position. I was happy that I didn't land up losing money. But what effectively happened was I saw price action was moving up into this much higher level over here. I was having a look at the previous resistance levels. I was also having a look at some fundamentals to do with the Japanese markets. And I decided to short the position. Now the price came back down and I just didn't like what the position was looking like. And the specific reason was because price action right over here decided to relax quite strongly, come down to this level, but I saw that it didn't want to break below this EMA level. So I decided that I was going to wait for the position, and as price moved back up to my sell orders, I decided to get out of all 3 trades. So I didn't make money on those trades. I made only 0.01%, so the trades were effectively a loss. But now I've re-entered the positions, and I'm hoping that I can hold these positions over another couple of days, maybe a week or 2, and see if they perform. So also what you can see is that sometimes these trades don't perform. I get out of the position and then I try and get in at a later stage. This happens very often. You're never going to be right on the first time. Sometimes you might have to do it a second time round or a third time round. So you don't have to worry too much about, oh, this trade didn't work out. Cut the trade and just walk off. Sometimes you need to still monitor the trade and see if the opportunity can play out for you and you can get back into the position. Sometimes it doesn't work on the second time or the third time round, but that's what it is as a trader. Keep on going back and keep on profiting from it. The last position that I had was on the UK markets. On the UK markets, on this trade, I made a 0.07% gain. So it was the largest single position gain that I made. I got in on the position on the 17th and got out of the position on the 20th. So you can see over here, right down on this level, I was able to get in on this position around about right over this level over here. And I basically saw that there was a breakout formation forming. Now, a breakout formation is a very simple trading formation that a lot of traders out there use. There's so many different names for it. The volatility funnel, the force breakout. You can have a look online, have a look at V-wedge breakouts on trading patterns. Tons and tons of people use it, but I saw this formation was forming up. I decided to get into the position. I was thinking of adding more, but decided to wait and see. And unfortunately, I could have made a lot more money on it. As the position broke, I could see how price was moving a bit higher, and I decided to get out of the position a bit early. That was mainly because the markets were becoming incredibly overbought, and I did not think the market was going to have enough energy to keep on moving higher. Now, I was wrong about that, and I could have doubled my profit on this position. But the thing is that as a trader, we don't necessarily know exactly where the price is going to land. We just are able to predict based on a probability ratio. So sometimes I can get into positions, I can do incredibly well and get out of the position just before the market breaks down. And sometimes I get out early. For myself, I'd rather be early or I'd rather be right. I don't want to be too late. So sometimes on these positions, I get into them sometimes a bit early, but most of the time I'm on the spot just before breakouts or just before pivots. And sometimes I get out of the position early. I'm still working on that. And as a trader, even though I'm a professional, I still have a huge amount that I need to improve on. But once again, it was a good gain for the week. I made the profits that I needed, and now I get to move on to the next week. So going into this week, I'm focusing on having a look at these trades, seeing if I can still find opportunities in them, if I can still take a few of the longer term opportunities. And I'm still focusing on seeing how the positions I still have open are going to perform. And this is just a simple example of how I can show you how I analyzed all of these trades in that previous video, and now I'm giving you an update of exactly how they performed. This is what it is to be a trader, and this is what it is to try and help you out and see if you can learn a bit more about how I'm getting in and out of my positions so I can show you a bit more transparency in my day. Once again, everyone, thank you so much for tuning into this video. It's been great working with every single one of you and making lots and lots of nice content. To anyone who wants to learn more about what we do at MS Equities, please visit www.msequitiestrading.com. You can find out everything about our online training academy, how we train students in 28 countries around the world. And once again, to anyone who wants to get access to that promotional discount, 80% off, so it's only $150 to study for 12 months with our online training academy. Make sure to email us, study@msequitiestrading.com, and my team will make sure to get hold of you. Once again, have a great week going forward, and I will see you in the next video. Cheers for now, everyone.